So I see I got a couple of questions. Am I swarming MES2 a lot? I'm doing it more in NQ because it works better in NQ. We don't get the kind of extensions in ES, MES that you see in NQ. So the idea works better on instruments that move more. Although, the higher tick value in ES, under certain conditions like ledge breaks, it works really well. So the long and short answer is I'm doing it more in MNQ, Lance, but I'm specifically ledge breaks are one I'm looking for in ES because that pays to do it there. But the technique likes motion. So let's see, how do you do that? Thought you were only allowed to have two.
I think copying to so many different places and accounts and everything.
Oh, yeah. I'm doing it a couple different ways. By definition, or by default, Jigsaw is multi-account, multi-broker. Although you select whatever account you're trading in one at a time. I'm running it through the bridge to Ninja, where I am running Apex copier. So that's copying the Rhythmic related accounts. And then I've got another little piece of code that's copying to another machine that's across brokers. So there's a little bit of code in there, and Apex copier, or what's it called? Replicanto.
Replicanto, yeah.
Yeah. And then again, Jigsaw bridging to Ninja gives you a lot of power because by definition, Jigsaw is multi-broker, multi-account. Okay, so I can only have two platforms with DOM. I still don't understand what you're asking. No idea what you're asking. Try to rephrase it, Donna, that two platforms with DOM. I don't.
Is she talking about the CME, the CME thing about how you can't do more than two things to a single data feed or whatever it is? I forget.
Non-professionals are allowed to. Yeah, they don't know that I'm running multiples, because what I'm doing is, and I don't want to spend the whole session on this. RT Rhythmic Trader Pro has a feature called a plugin where you can connect multiple platforms to the same Rhythmic accounts, Donna, and there's no limit on that. It's two platforms. Yeah, that's the professional and non-professional thing, but there's a myriad ways around that. Let's not spend this session on it, but feel free to bring that up in the pit and we can help you with it. Absolutely. Okay, welcome everybody. This is the TRG Ad Hoc with Doc session on FOMC. I see this is a TRG event that we open to the public. I see some TRG members. I see some guests whose names I don't recognize. I see friends of TRG. There's Dimitri, old friend of ours. A number of other folks. I'll say hello to you as I see your names. Welcome and thanks for coming. We try to do this, a couple of times a month on NFP and on FOMC. Basically, the idea here is I'm not trying to figure out, if FOMC comes out this, I'm going to do that. It's not that kind of thing. We're not predicting the future, which is just silly and stupid and daft anyway. What we are doing is we are looking for the thin liquidity and the extremes of an announcement, and the announcement or the run up to it and the press conference afterward creates a lot of volatility, and the market really thins out. All the big major orders get out of the way, certainly anywhere near the inside market. But what happens is there's really good opportunities if you fade the edges, and you have to. It's a judgment call where that is, and I'm going to talk a little bit about how I do it. But often you can get really, really good extreme entries back into the range on news events like this. The danger is you can also get really offsides doing that. So a technique that I've been playing around with, if you're a TRG member, you're familiar with what it is called, we are calling it swarming. It's nothing, no fancy trademarks or anything. The idea is, it was something that a friend of mine who runs an algo fund, I call it small. It's a $750 million hedge fund in New York. And he games technical levels and technical indicators. And he has a really good optimization algorithm that he lets me play with once in a while. So I ran the recent volatility and the minis and micros against that. And it suggested an interesting approach, which was to only use micros, to use very large quantities of them, and to always assume that you're scaling a trade. So if we get to an extreme, the trouble with minis, and you can end up, even with a one lot in ES, you can end up $500 off sides really fast. But in that same motion, you could scale into 10 micros, take a lot less heat, and end up with a really interesting entry to a trade back into the range. So that's the kind of long and short explanation about what I'm going to be doing. I do have some ways that I look for extremes. Some of them are just based on the volume profile. ES has got a real nice volume profile. It's the one over here on the right. So, the volume's thin at the top. So any exploration up there will be interesting. Certainly, if it were to push lower, I don't know that I'd want to be buying that right away. I'd probably join that momentum if we got it, just because the market is more bearish than bullish right now. But we're kind of in an ambush zone too. If you look over here on the far left side of my screen, these are TPO views, session by session, with the overnight and the regular session broken in two. So this was the overnight last night. This is today's session. The blue lines are the initial balances, the first hours of those. And you can kind of see where the volume is. And so this kind of squirt up that we got today at the open, which kind of caught a bunch of people off guard, I think, it looks very interesting to maybe move back into the range. Or if not, look out, because this gets us above recent, we're right here, recent highs. This are they. So, there's an air pocket here up to the next cluster of volume, which is all the way up at 4,100, 4,200. So this is just a really interesting setup for motion. If the market likes whatever the Feds have to say, FOMC has to say, and the right color tie is on Powell, there's all kinds of nonsense that people trade off of. I remember Alan Greenspan, which hand is he carrying his briefcase in? If it's in his left hand, go short. If it's in his right hand, go there's all kinds of craziness around this announcement. So it's fun. Anyway, we're in a great spot because of the push up today. So I'm looking forward to seeing how that plays out. We'll definitely look to fade a weak move up. And, again, I would consider that anywhere near the top of the volume profile or pushing higher than that. NQ is this one over here. It's a little harder because it really extended its range this morning. There was a really good short squeeze in NQ. If you traded that long, you traded right. I was in that one myself. It was fun. So we just have a big distance. And again, that's why the swarming works so well in NQ versus ES, because you just have so much more distance. This is RTY. This one here is YM. I'm not going to play those, but I like to see them, just in comparison. Just to be clear, my domes here, the green represents the value area. These kind of purples are the points of control, the highest volume. I don't put much weight in that. And then blue is a VWAP. So I'm kind of, I don't believe in reversion to the VWAP or reversion to the mean. Price and the VWAP will head toward each other over time, particularly toward the close of the day. But that's not a tradable edge in my opinion. What it does do, however, is it gives you a decent idea of where the extremes are. So just for fun, this is a plot for NQ and ES. That blue line is the VWAP, and then these are just extremes away from it. The oranges are sigma 2 standard deviations. The grays are 3, and the kind of reddish are 4. So, you can see we've been kind of just riding 2 standard deviations all day on the way up. And, this is the gap up, and gap and go day, which is really unusual when we have FOMC. So, I'm kind of, I'll crunch these together just so you can see. So, I'm kind of curious how this is going to play out. It should be interesting. And then again, I showed you on the TPO view, you can see, clearly there's a lot of volume below us, but, if this breakout succeeds and gets above the couple of days ago where all that volume was back there, then, it could be off to the races to 41, 4,200. That's not out of the question. So again, I don't believe in predicting it. I like to trade the actual reaction to whatever. And also another important note for FOMC day, there's 2 important times. One, they're going to make the announcement, and, all the computers are going to go crazy gaming that. And, we already kind of know what the odds are for those numbers. And then the press conference starts a half an hour later. And, that's when some of the, how close was it? What are they really leaning? what's the look on his face when I ask him the question? That kind of stuff happens. We will keep the session running till the beginning of that. I have, as I said at the beginning, I have somebody delivering something, so I may have to take a little break right around the press conference. But, if it's interesting and there's action, we'll keep the session running. Otherwise, we'll wrap it up after the announcement. So that's the plan. Let's see. Can I explain NinjaTrader 8 and my indicators? Luis, do you have 5 years? I mean, what specifically? You just asking what this view here is? Is that your question? Because that is an NinjaTrader 8. Those are the only charts on here that are. And this is just a fast, what's called an equivolume view. And so the width of the bar represents the volume, and the numbers above and below are just the wave volume from one zigzag to the other. This is the way that I measure the short-term range. The lines over here in the little channel is a linear regression. And again, that's about as much as I'll have time to explain about it. That's a pretty fundamental thing that we do in TRG is, short-term range and session ranges. So that's what you're seeing there. It's a mathematical way of interpreting the short-term range using regression. And if that that would take an hour or two to explain all by itself, but it's relatively simple actually, if you get the math. Okay, so let's see. I think I got all the rest of the questions. Yes, I did. Okay. Again, feel free to ask questions. Whether I can answer them in detail or not depends on the question, but you're welcome to. This is a very casual, free-form kind of environment. We're going to see if we can catch a cool swarm trade. Oh, now one of the other things, you guys, if you've been to any of my sessions where I do this, for FOMC or NFP, I have this habit of parking limit orders out where I think the extremes are going to be, and the market will trade within a tick of my limit order and not fill. I am still going to do that. I'm still going to use limit orders. Hopefully they'll fill today. But if they don't, I'm going to hit the market with market orders when we're near those limits. That's part of the whole swarm idea is you'll never get a perfect entry. So, rather than trying to get a perfect entry with 1 ES or 2 ES, it's a whole lot easier to get a good entry with 20 MES. And, you don't have to try to get them all at once. Yes, you'll pay a little more commissions doing that. So what? We have very high margins in the trading business. So, whether you're paying, $3.50 for your mini or, $1 for your micro, yeah, it's a little more money, but in the scheme of your profits, it's negligible. So never think that way. Never be concerned with the commissions. It's just a cost of doing business. Keep it as low as you can, but it shouldn't drive your trading decisions. Okay. We have, is that 2 minutes? Am I reading that right? Yeah, we have about 2 minutes till the number. So fasten your seatbelts, take a deep breath. It's always fun when it first hits. We get, a lot of crazy motion. Right about now, the book is starting to thin out. I don't have liquidity on this dome, although I do have it on the Auction Vista liquidity map, which is what my mouse is on right now. But just so you understand that is real liquidity. I'm just getting it off a different dome that's running on the cache, which is back here. And you can see the liquidity is posted on this one. And that's where the white is the more liquidity, darker is less. So you can see there's a chunk of it right there, a little chunk right there. There's 2 chunks right there. So I'm just running a dome without that in front of this dome because I want to trade MES, but I want to respect the liquidity of ES. And these tapes over here are running off ES and NQ. So, I always take my trading signals off of the larger instrument. They don't trade exactly the same, but they are derivatives of the same thing. MES and ES are both derivatives of the S&P 500, for example. So, but the amount of money and the liquidity is just so much larger in ES. So, you want to take your cues there, regardless of which one you're trading. Okay, so we should be getting the number any second here. And already we're in price discovery. Look at this. The inside bid and ask is moving back by 2 points. So, people that tell me they can trade this stuff are crazy. You can trade right after it, but right now it's, you're not even rolling dice. You're just peeing money away. You can't get accurate. Even if you had a profitable entry, you wouldn't be able to get out with your profits because the spread's too big. So, you got to wait till we have an extreme and whoop, there's the number. Okay, so something came out. We can see we're in price discovery over a huge range now. We shot all the way up to the top of the range. Look at that. We traded 90 and it got sold. That's an example of what I'm talking about, where extremes will get played. So let's see if we can get another run up there. In fact, just for fun, let's throw some orders up there and just above it. And again, like I said, my limits tend to get hit. Maybe we can get a fill on one of them. NQ is still a ways off its high, so maybe it can push up here. It's been strong all day, but look at this back and forth here. That's just, obviously, when it's doing that, you can't trade it because, even if you get a good entry and you're right, you never have time to get out with your profits. It's just moving up and down too much. If it gets directional, then we can obviously join it. But right now we're still in price discovery. In other words, we're going two directions. We are not just going one way. And if you look over here on this fast view, you can see, look at these wicks at the top and the bottom. I'm going to make this even faster to 15 seconds. That's how you can really dial in on the short-term action. Use a very, very fast equivolume chart so you can see the energy and, like the top is getting sold here and the bottom is, it was getting bought, but now there's more aggression down there. We're pushing into those wicks. So another push up is definitely an interesting short. Maybe there for another one. I want to catch an extreme. I don't want to be in the range because then I don't have an edge. But if I can get up here to the extremes, I get an edge, and if I'm wrong, it'll be obvious because it'll keep pushing the extremes, which is pretty unlikely. Get one right there too. And again, this is the beauty of micros. You can kind of start scaling in when it gets close, as long as you aren't too ambitious too quickly. Let's see if we can get another push up here into my orders. Probably won't. That the fun moving up was right when we pushed up to 90, but maybe we'll get lucky here and catch another push up. There, it's almost there. God, I'm tempted to add to short right here just to start this. You know what? I'm going to do that. I'm going to go ahead and put one on right there. That one's way too early, but it's a really good entry if we do move down into the other end of the range. So I'll go ahead and get started with it. But I really want to fill these up here because those are really where I want to get in. I want to be at the extremes. Look at RTY, by the way. It's pushing to new highs. YM is holding right in the middle. So maybe RTY can take us up. NQ's coming up now too. This technique works much better in NQ because of the movement. So I may do that trade over here as well. Let's do that. Let's put one there and see if we can fade further up here as well, just for fun. Wow, that trade was already profitable all the way down to there. I didn't try to take it off, but let's protect that profit. Maybe we'll ride NQ down here. So, all right, that was cool. I don't know if you saw that, but we just got about 15 points over here in NQ. And I'm going to look to try to do that again up here. And then see if I've picked up 2 in the ES, but I'm not getting as much action to the upside there. So maybe we'll throw some targets back in the range for that one. All right, we're short 1 again over here in NQ from just under 70. So, what's a good spot to be looking for profits? Maybe 50 on a push down. So, we could throw a target down there. There's some volume right here. So I'm just kind of fading in and out. That's all we're doing here. And ES is pushing up. This could get interesting. We could have a pretty strong move up here. Another pattern that I love to trade, by the way, and I just want to mention it now, is there's a very, very consistent pattern where whatever happens on FOMC day, the next day it will be reversed. Last month, it was classic. I mean, it was like up a bunch of percent one day and back like 3 times that the next day. Okay, we're almost getting filled over here. You can see the volumes picking up. That's what these circles indicate. So I'm having trouble getting to that one. So let's go ahead and take it a little lower down. Come on. Okay, so now I've got 4 over there. I'm about to get that one. Cool. So now we have 4 of them on each side. And let's just leave it at that so we can watch it here. And so I've got orders here to take profits on the way back. If we go back, obviously we might not. That's the beauty of the micros, is you get a lot of movement to work with, particularly in NQ. Look at this. I'm short from 78. I'm about to take profits on the first one. Just did. There's another one. Now we got 2 left. So this is a quick $100 already here, and I'm only trading 2-3 micros. There we go. I can lock it in $100 now with the last one. So I'm short from 88, and it's trading 65, and that was a 4 lot. So that's $100 right there. Now it's even further. It's down at 50. Let's lock that in. So that stops locking in the profits on that last one. Now you can see I'm profitable over here as well. So let's take a little of that off too. Okay, now we are flat in NQ. And I like this spot right here. Cool. Now we have 2 left in ES. We can protect the profits there as well. See if it trades down to the VWAP or further down into the range. In the meantime, we're keeping our profits. Short from 85.25 right there. It's now trading 79.25. And as I said, I'm trailing some stops down here to protect that profit, which is now also about $100. So since the announcement, we are up about $312 in just this one account, not counting the copying. So this is why I like this technique so much. It's number one, it's fun. You can kind of play a little bit as long as you stay disciplined about, where you're entering and exiting. And there we go. Okay, we just took profits over there as well. So that's probably all the excitement that I would play off the announcement. It's kind of settling down now. So the opportunity gets lower as the trade kind of settles in and the liquidity picks back up. But we often see another bite of the apple when the press conference starts. So if we do push up to extremes, I would fade it again. But right now, we're in the range, which was my target. So, trying to play even this down momentum, which is really strong in NQ, joining that is just too dangerous because it'll turn right around like it's doing there. You have to get a good extreme entries to play this technique. But the beauty of it is we get these, NFP, we get FOMC, we get the FOMC minutes. Each month there's 4 or 5 events that cause this kind of energy for 5 or 10 minutes. And it's just so tradable. Again, as long as you respect that you need to be at the extremes and not try to trade the middle here. This is one of those trades where the middle is just absolutely the wrong place to be. Even if there's momentum, this is one of the few conditions in NQ and ES where I won't join momentum because it just reverses too quickly. You just, again, if you join momentum, it's got to ride for a while. And if you trade extremes, you're right or wrong right away. And that's a really good thing to be in trading. Good trades work right away. If you're wrong, if I was fading those highs up there and it just kept going, okay, I'm wrong, but I entered up there. So how bad could I get? How much loss could it be? Whereas if I was trying to do that from down here, I could get just crushed off sides. And that does happen. That has happened to me. So I speak from experience. All right, so let's see. Isn't this a blast, Lance? For those of you in TRG, there's a really good explanation of the technique from last Friday's live session, my normal Friday live session. We went through all the details and why this is and how to do it and what information you do and don't need. It's a really basic little system. And again, it's really funny the way that I came upon this. I trade pretty decent size and I trade the minis and trade the micros when I'm teaching. And sometimes, other times I'll trade blocks of micros, but I never thought to do, huge amounts of them. Like, this morning I was trading 120 micros in MNQ and it was a couple of $1,000s of profit, in 15 minutes at the open. And just scaling in and out. And I got to tell you that is, if that's, if you have the energy for that, it's a fun style to trade and it's easy to practice. If you're interested in practicing it, there's a drill. People have different names for this. Cut and reverse drill is one. Another is always in the market. But that's a really good drill. Open up a sim or one of your small accounts and put a trade on and you can scale up to whatever limit you give yourself, 20, 30, 50 micros, whatever it is. And the only rule is you have to at least have a one lot on in one direction or the other. And you can scale in and out as much as you want either way. If you want to try this and practice it, that's the way to do it, particularly, around announcements like this where you can practice extremes. But it works real well at the open of regular trading hours as well. From the open through the initial balance, which, this morning we had a really good open 5, as we call it in TRG, and initial balance, which everybody uses that term. So, this is 15-second bars of the open, and it danced around a bit, and then it really strong move up, little pullback, strong move up, and it just kind of rode the first hour high and then broke it, right after the initial balance was formed, broke right there. And, since then, we've just been entertaining that area. And, with a long bias, obviously, because we're at the high end of the initial balance. But there's so much energy of the motion in there that there's really a lot of opportunities. Again, this one is ES, which I'm finding, there's just less motion. You have to trade more scale. Let me show you NQ, which, you just get, the motion is just so far. This is NQ, and it tends to, be a little more erratic. and therefore it lends itself to this technique, and again, it didn't do anything different. It was just working the initial balance high, but some of the squirts up. I traded this one right here, right after the initial balance. We had a strong move up and kind of a weak pullback into ebb and flow here. And this is one of those ones where, again, the bias was long. So I got long again after, I'd traded this long already. And I thought, well, that's an interesting spot. I didn't do it a lot. I scaled into, as it was going back and forth in here, I think I scaled into like 10, 15 micros. And then, we got one of those. And just look at the distance. It's, let's see, that is 397 right there, and this is 445. So that's almost a 50-point move. And do the math. Even with 10, 15 micros, that's a lot of money. So it's just really fun, cool technique. I'm really enjoying this. And again, for TRG folks, we will be launching some. I will be posting some trade parameters for this as I work them out. I was doing a lot of testing this morning with the biggest volume I've used so far, which was 120. And got to be careful with that volume. If you try too early and you scale in too fast, you can get run over. But it's just about keeping your head, really. Okay. Hey, Steph F., how are you? Jeff Fielding, Dimitri. I already said hello to Dimitri. I'm just looking back through some old friends of TRG, as I mentioned. People that have been around for a while with us. Nice to see all you guys. So anyway, that's kind of the big picture and kind of a few details of the little picture. Again, for anybody, whether you're a guest public or you're TRG, if you have questions, I will be happy to answer them. And now it's kind of settled down. So between now and the press conference, there's really not a whole lot to do. We're smack dab in the middle of the value area, just off the VWAP, in the middle of the range. NES. That's just the absolute place where you don't want to play, because it'll go either way. But on the other hand, when we were up here at 90, look what that was like up there. We got really aggressive selling at every attempt to push up. That's what these circles indicate, is high volume and traded volume, not liquidity. The white is liquidity, not traded volume. And if there's anybody that doesn't understand the difference of that, say, I don't understand, and I will clarify that, but I'm kind of assuming there's a basic level of knowledge. Liquidity versus traded volume. Liquidity is what people say they're going to do, orders, which is useful but deceptive sometimes. And then traded volume is what they've actually done, which is much more valuable, because it means there's skin in the game, or skin has been removed from the game. So always, rely on traded volume, but liquidity can be useful for interpreting inflection points by all means. All righty, so I don't see, let's see, did I explain that? I did that. Yeah, they really did, Dimitri. It's funny, because I remember when they first came out, there was a lot of conversation about whether they'd be useful or they were just for, retail traders to take their money. But, think about it. If you had a position, let's say you're using one of the evaluators' $100,000 express accounts. I'm talking about Lee Loot, for example. It's a 12 or 12 mini 120 micro. I have successfully passed that 10-day thing both ways. And I got to tell you, doing it with ES, you can do it, but boy, you get caught in one black swan move where you're off sides and the market really runs, and you're going to blow through that drawdown. It's impossible not to. And that's the genesis of the swarming idea. As I said at the beginning of the session, I took a bunch of the evaluators' parameters, because they're way overly strict and they're designed to make you fail. And I sent that off to a buddy of mine, along with some of my measurements on the volatility and some of the trading I'd been doing. And we ran it through his little algo optimization model. And it was funny. It came back and it said, don't trade minis, trade micros, trade much bigger blocks of them, and swarm in and out, because the volatility is such that there's going to be no such thing as a good price. It's going to be groups of prices. You have to think in ranges when you have this kind of volatility. I mean, gosh, look at that drop we had a couple of days ago. I guess that was the 21st. From 40.20 down to 39.40 in one session. And so that kind of movement will blow up most good statistical trading models. but that was why this response from this optimization tool was so interesting, because it said, well, if you don't want to blow those up, what you have to do is use more size in micros and scale in and out more, so that the black swans, the extremes, don't wipe you out. They don't hit the drawdowns. And that's the only way the model could make it work. And this is a very sophisticated model, as I said. My buddy runs a fund, and all they do is game technical levels and technical strategies. And they sling high frequency trades at them. They've got a server that's right next to the CME, and a bunch of mathematicians sitting in a nice office on Long Island developing these models. So every now and then he lets me run my data through it. I don't have access to the model. And that's what happened a couple of weeks ago. And that's where this came from. And, it's not the only thing I'm doing, but I'm really enjoying this as a trading style, particularly for the ledge break setups, because it just works so well on those. Because, you can never get a ledge break exactly right, and you never know how far it's going to break by. It will puke as, all the people get stopped out, and kind of guessing where that's going to be is hard, but taking a few bites at that apple is a much easier way to play it. It's not nearly as stressful. And again, if you scale into a short, say up here in this example we just saw, if it blows through that, you're wrong and it'll be obvious, but the volume is already so thin that, the odds it's going to blow from 90 to, another 90 up are slim when it's already had a sharp move like that, because the sharp move is done typically because people are offsides or somebody's initiating a really big trade. And again, that just doesn't keep happening over and over again. There's always ebb and flow. Our favorite model in TRG. Oh, let's see. I think my delivery is here. JVC, can you handle the room for a minute?
Yep. No worries.
I'll be back as fast as I can.
Quick, everybody, get crazy. Dad's not here. So Steph, Jeff will have something to say too, but yeah, basically any of the evaluators, the main key is that you have enough micros available to you to play with. And from what Jeff has determined, 30 is the right number. If you've got 30 available, unless you just do something completely stupid or get really stubborn or just refuse to pay attention to what's going on, it's very unlikely that you're not going to be able to get out of a trade with a profit. But you really do need to have a decent amount of dry powder available. Yeah, it's exactly right, Amy. It's all about that dry powder. I've been this week trading the overnight, which I don't ever do. I'm not a range trader. I'm a very defined structural setup morning trader. But I've been trading the overnight this week, doing like a baby version of this. The most I've gotten up to is 9, and that was last night. And it's been so low stress. It's been so easy because you just look for the extremes and fade them. And if it moves a little bit more extreme, as long as it doesn't do it on volume, just add. And it ends up coming back into the range. But, the key is just paying attention to the volume at price. As long as you see extremes where, the volume is tapering off and you're running out of interest, and the probability of an explosive move against you, especially in the overnight, is ridiculously low. So it's very, very safe. And I've been completely comfortable having, 5, 6, 7, 8, 9 micros on at a time. It's just trivial. And then just as it comes back in, start peeling some off and just like, here's $5, here's $10, here's $12, here's another $5, here's 20. It's really, really relaxed and enjoyable. I've really been liking trading ranges in the overnight. And that is a week ago, I would have said that those are words that will never escape my lips, because I don't do that. And this idea of, I don't have to get a perfect entry. I'm not using a 1 lot or a 2 lot. And I have to pinpoint it. Has really made a huge difference. So
okay, I'm almost back. I just need 2 more minutes, and then I'll answer all the questions if you haven't already.
No worries. We're just chatting. So the main issue, Steph, is that this requires range extremes, and they need to be really clear extremes. And you want to see a nice taper in the volume. If you look, actually, I'm looking at my screen. Let me look at Jeff's real quick and see if there's Yeah, you can see it. You can see the taper at the top of his middle DOM. What is that? Let me get this on my full screen, my big screen. There we go. That's RTY actually. But I mean, you could probably do it in RTY. But just using RTY as a visual example, look at the taper of volume. It's just as it gets up into the extremes on the upside, there's nobody that's really interested in playing up there, and it's got a lot of distance in there. So you could scale into a move up into that as long as there isn't a ton of volume coming in. And you could add 5, 10, 15, 20 micros in different, chunks along the way. But in ES, you usually don't get the big, nice tapered moves like that. Yeah, there are occasions where you do, of course, volatility comes in like FOMC or NFP, whatever. But the main thing is you want something that moves plenty so that it generates those nice extremes. And so NQ is the obvious candidate for that under most normal conditions, or MNQ in this case, obviously, because we're talking micros. So.
Okay, I'm reading back some of the questions. This works best with the people that give you micros 10-to-1 with minis. And for example, Lilu does that. Apex doesn't. They give you like 10 minis and 24 micros, or they don't give it 1-to-1 parity. It should be 10-to-1. And so I would look for whatever one of the evaluators you like, but I would look for one that gives you enough micros given whatever the trailing drawdown is or whatever your risk is to that question. So I'm answering the question, would this work with a Bullen X 50K? I don't know what their rules are over there, but that's what I'm looking for. No, I would not use an Apex 25K. Not enough micros. I wouldn't use Apex for this unless you're using a lot more. And again, see, and not criticizing them. They're good people. But check this out. This is the problem.
Their math is weird.
Their math is weird. Yeah, look at this. This is Apex. And so in a 50, why do I only have 20 micros, but I have 10 minis? That should be 100 micros. And, if I look at Lilu, that's the reason I just brought them up at the beginning. I've got a few funded and a couple of accounts I'm doing this with right now. I just did one of the expresses with 12 minis, 120. See, it's parity. And the same thing, 50, you get 8 or 80. That's the way it should be. Or, 12, 120. So this doesn't make sense to me. It's almost like they don't want you to do this here. A 250K account with 27 minis, you can only do 50 micros. That's more like what it should be over here, or over here.
You don't even have your 30, ideal minimum until you get to the 150K.
Right. So. Which just doesn't give you enough room to do anything. So, yep. And again, I don't want to go through each evaluator, but that's what you need to look at. You need to have enough micros given, whatever the risk is, the drawdown.
I'm thinking of grabbing a 25K Lilu just to dedicate to doing this in the overnight because you got 30. So
yeah, it'll work really good for that as long as you don't think in terms of 30. You have to think in like, 3 tens or,
or
6
fives or whatever. Yeah, exactly.
And that way you just will never get so far off sides that you can't make money with it. And, it's really good for learning how to manage your way out of a bad trade. And, people say, well, isn't that adding to a loser? No, it's not, because again, you're not thinking that the price you entered on is the right price, and if you're off sides, it's you're adding to a loser. You probably just got the price wrong, and maybe by adding to it when it's more extreme, you get the price closer to a tradable price, or at least getting out flat. And again, TRG members, I showed a bunch of examples of this last Friday, including I purposely got myself way off sides on a trade and then worked it back to a break even. Just to show how you could do it. It's a really cool being able to do that and not just having to say, nope, I'm wrong, which is not a bad thing. Don't misunderstand me. It's just, this is a very flexible approach. It certainly takes practice to get it right, though. That's true of anything. Okay, let's see. Correlation's critical. That's why I have all 4 of the indexes up next to each other here. The correlation has to be working together, or one of them might be extreme because of earnings or something. And so you have to factor that into the context of what you're doing. Just by the way, I want to just bring this back over here. I showed you guys this a few minutes ago. This is just looking at standard deviation extremes Look at here over on ES. We came right up. That was the announcement right there. We came right up to 2 standard deviations away from volume, from the VWAP, from the volume center, which is also the POC, as a matter of fact. And it's real close. And then we immediately turned. That was the trade that I was fading right there. NQ did the same thing. This is really common. They do this all the time. You just have to make sure you're understanding what extreme means, and you don't get too ambitious before that.
I was able to play that one both ways. It was really cool.
Exactly. And the other thing you can do is if the market is range bound, which a lot of days it is, and people say, that are trying to trade trends, there's no money to be made. The market's choppy. Choppy range bound markets are great. That's the easiest market to trade because risk is predefined. It's in a range. And so this is a really cool technique for, here, let me just draw a picture real quick here. I know you guys love it when I draw. Because I'm such a good artist with my mouse. But
the Picasso of trading.
Picasso of mouse drawing trading, yeah. So, think about it this way. Extremes are great. If we got, we come way up here and then we come back to the range and then we go way down there and we come back to the range, you want to be fading those. That makes lots of sense. But you don't always get that. There's a lot of days where what goes on? We just have a range. So, the volume profile might look something like that. And, we're balanced and we're just going back and forth right here. That's very typical in midday, in which case you could trade that range the same way as if those are the extremes. You just have to define the range properly. And to the, who was it? Luis that asked me about, that's what this is for over here, that's how I statistically evaluate the range. So that's the actual answer to your question. So anyway. Just wanted to make that clear. And again, there's a limit to what we can do in kind of a free live session like this around a topic like FOMC. But that given, I am happy to try to explain everything as well as I possibly can anyway.
And this is the stuff we dive into deep in TRG. So
exactly, yeah. And now I'm back on the dome that has the liquidity, and you can see the liquidity has stepped back up now that the announcement's out. Now we have decent, not as much as you'd like to see, but it's certainly, it's right on the inside bid and ask, and it's not a 8-point spread like it was for a while. And so, we're back to stability. So under those conditions, you could certainly trade the range. Although, given that we have the press conference coming in 4 minutes, that's probably not a good idea today, but on any other circumstances, it is. Okay, let's see. There's no better time to do this or not, Steph. It works really, really well overnight because the equities aren't trading. So the equity futures are kind of just speculative, and they tend to move around a lot, but they tend to respect extreme boundaries really well. Particularly around earnings. Earnings will come out and will burst one way or the other, right before the open. That happened today. And then, it'll be a good trade. Oh, this is getting interesting again over here in NQ. It's still a ways off the top. Maybe not. Yeah, no, it's still too far away. The 2 standard deviations would be up at 13. So I'd want to see it up here somewhere before I'd fade that one again. Just like this was a good area here in the 90s. We're at the top of value, but we're nowhere near the extremes. So that's, again, maybe the press conference will say something that pops us up there, in which case it would be an interesting spot to fade it again. You could even, like I said before, I tend to get filled on these, park some orders up here, see if it squirts up there for some reason. Again, you could get filled and then it just keeps going. But the odds it's going to go from, 82 to 90, 92 and never look back by even, 5 points, just really unusual. So here I've got orders, in the high 80s. So we'll see what happens, see if it gets up there. Okay. Yes, we did do an AMA with the CEO of Lilu, Chris.
That is, in fact, on our YouTube channel if anyone wants to go see it.
Yeah, yes. Yeah, nice guy. Interesting business. That whole prop firm, the evaluator business is a very funny business. Very profitable business, but it's gotten very competitive, which, the competition's actually good for those of us that, from my point of view, it's just free money. It's other people's money I can trade. And, the first 10 grand, I don't have to split it with them. And, if you're a good trader with with a legitimate edge, the whole idea of doing that and copying makes a lot of sense. I'd rather do this and play with lots of micros and copy it to, a few different accounts, which spreads the risk out than putting on a whole ball of minis in a much bigger account. because then the potential to lose a lot of money really quickly is there. We've seen lots of sweeps. A sweep is where one order comes in and just takes out the order book in one direction. And, we've seen in ES in the last couple of months, many, many, many examples of sweeps that are 10 points. So, it trades from 82 down to 72 without even missing, just straight down. And it goes through all the liquidity. So if you happen to be long up there, or you've got a stop at, 78, it's going to go right by your stop and you're going to get filled at 75. That's the kind of stuff that's happening. And, even a good trader, that stuff's hard to manage. You have to constantly be thinking about risk and small scale. So, being able to use other people's money and leverage that up is a nice way to deploy assets in your favor. Okay, so what other questions do you guys have? We have a really nice turnout. Thank you, everybody, for coming. What else can I tell you about? Catman. that must be you, JVC.
Catman.
Yeah, the cat.
Call me Catman Crothers.
Cat Baloo.
Yep. He did say that, Jeff.
Yeah, he did say that, and again, it doesn't require the brain of a brain surgeon to figure that one out. Calculate the difference in commissions and then look at the difference in how you can manage risk. And if you have any understanding of the market, it's a no-brainer. Anyway, and I'm not saying I only trade micros now. I still trade minis all the time. But these kinds of trades, the press conference is starting. You can see we've gone back into crazy back and forth price discovery. So let's reset the domes and see if we can catch an extreme here. There goes NQ. Remember, I've got some orders up there in NQ, but they're way up here. So it's got to go up a lot more before I'm going to start fading this again. Otherwise, it's probably just going to explore around. And as I mentioned, I'm actually hedging this with some triple ETFs. I've got more of the shorts than the longs, but I bought them both because I figure, I can always just ride the one that's working and come back to the other one later and scale into the other one. So that's how I swing trade. I use the triple ETFs and then I day trade the futures, and it provides good balance. Any special discounts coming up to join TRG? That's a good question.
We actually have standard built-in discounts that are always available for a quarterly or annual subscription. And if you know Heidi, I'm sure you can talk to her about if it's worth it to join or not.
Yes. Heidi is a valued member, and I don't want to speak for Heidi, but I think TRG membership has been of value. Let's say that.
I believe that is a fair statement.
Yeah. I just want to be really
true, Amy.
I want to be really clear too that we're very different. This TRG is not about get rich quick and magic indicators. We are full-time pro traders that read the order flow. And you're not seeing my other screens, but I'm watching. My primary view of market structure is like this. This is a 30-minute footprint in Sierra, and that's where I'm looking at the overall contextual picture. And like I said, I'm running a clone of that on another monitor that I'm watching. So the domes are where I execute, but I have, as you can see, a number of different types of analysis. This is the very short-term range here on these 15 seconds. These TPO views over here, which are Sierra chart, are the the day-to-day structure, from one session to another. And then that one I just put up is the intraday structure, the footprint structure. And that's context. So that's how we kind of determine where we might want to play, where the inflection points might be. In addition to extremes, which is always good. It doesn't matter what the structure is. Extremes are interesting one way or another, or both, all the time. So, okay.
Yeah, it's a fair question, Brian. Don't worry about it. But this is part of why we like to do these public things from time to time, so people can see what we're about. And, we even have on our YouTube channel, again, we've made a whole bunch of videos from the past available just for everybody for free on the YouTube channel again. So you can hear firsthand Jeff and Lee and a little of me, do what they do and teach what they teach and see for yourself here's what we do every single day.
Yep.
Week in and week out. So
I have been trading almost every day for the last 50 years. That is not an exaggeration.
Jeff has been trading since 3 months before I was born.
Oh, God. Now you're making me feel really old.
That's how I always can remember exactly how long you've been trading.
Yeah.
It's really easy. How old am I?
Yeah. It was my passion from when I was a kid. I always was interested in how markets worked. And when I was 13, I opened my first account with my birthday money. I got $1,500 for my birthday. I took it down to my dad's broker, Al Reintees at Dean Witter Reynolds. And I bought shares. Actually, I bought options in a company called ComSat, which
options were barely even a thing yet.
Yeah, I know. I was
brand new.
I was so aggressive, and it was so, I'd been studying at the library for like 3 years before this, and
I had
look at
no
this.
idea what you didn't know.
We're coming. Oh yeah, no, not at all. I thought it was different. Whoa!
We are moving.
This is total price discovery. Let's see if we catch a fill up here at my extremes. We're still not quite there, but NQ got close. It got to the 70s, and I've got orders up in the 80s above it. Now I think we're about to get a fill. Whoa. We did. Okay, we are filled. This should be a lot of fun. Wow. Market really, gosh, this is going to be so easy to pull profits out of. It's moving so, I am pulling, I'm getting hit on limit buys down here, but you guys can't see it because it's happening too fast. So let me try to scroll back down to it. Okay, that one's covered. We got one left in ES. We just took profits over there. I need to sell a few more over here in NQ. Boy, this is rocketing up. Look at this. We're now at 16. Remember I said I was selling 80. Now I'm short from 4 here. And now we're profitable down here. We are going to start taking profits here in a second in our MNQ trade. I'm going to leave ES alone and trade. Again, this works a lot easier to do in NQ because of the distances, but we're really blasting up. Right here is SD2, by the way. So SD3, in other words, 3 standard deviations will be up at 88. Right now we're at 523. 588 would be the next level up. ES is already there. ES is already at its 3rd standard deviation and on its way back down. So its levels are at the moment 98 and then 4008. So, okay, I'm about to start taking more profits off here in NQ. I've got a 12 lot. So as it comes down to me, we'll put some orders down here. And here we go. Here they come. Let's take profits. Boom, 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 boom. Boom. Okay, now I've got 8 left. There's some more. Let's take some more profits. Boom, boom, boom. Now I have 4, still taking profits. Okay, there we go. And there's another one. Now we have 3. I'm going to take these limits off and try to ride this down with the last one. Nope. All right. I got filled on it as I put the limit in. So we just pulled another about $190 out of MNQ there. And the ES trade was... not quite as good, but still not bad. We made I didn't go as big scale there, so we only made another $20 over there, but that was only a 2 lot, so I'll take that. Oh,
I forget. Are you copying? Are you running your copier?
Yeah, I am. I was running it. I said I was running it, but that if there was any trouble with the copiers, I was going to turn it off, but no, it's running.
Okay.
So yeah, so that's actually cost 7 accounts. So, I'm not complaining at all. It's really nice. And as I said at the beginning, 3 of those are, well, let me just say it this way. Some of them are funded accounts at Evaluator. Some of them are evaluation accounts. And then there are 2 cash accounts in there too that are just my own. So I really like using other people's money when I can do it inexpensively. So that's the idea with, evaluators. I don't need their money. I'm funded in a bunch of places and I've been trading my own money since I was a kid. But again, why not? Boy, this looks really interesting to fade, but we're not pulling back quick. So I don't know what was said at the press conference. I don't watch it. It's just distracting. But, we're really at extremes here. I'll show you. If you just look at in the short term, we're up here. That's SD2, that's SD3 from VWAP, which is coming up. So there's some volume in here. This is not just to snap up, back to the extremes and trade back into the range. Whatever was said, the market likes it. So maybe... whatever,
They said what the market wanted to hear.
Yes. All right. So it is what, 11:40? Yeah, let's stay with this a little bit longer. I'm not going to just, stay with it to stay with it, but since we're at such crazy extremes up here, it's kind of fun to look at it. I think I like an ES short again. I'm going to go ahead and do one right here. So there's three more short. Let's just grab profits on quick 4, 5, 6, 8 tick pullbacks if we get them. Grab another one there. Take two off at 95. ES really likes to trade around the quarters. So if we get above 0.0, we're probably going to trade up to 2 real fast like that. And then we can fade that really quickly, which is what I'm doing. So, the next burst will be up to 5 or 7 and then 10, just break the number into quarters. And that's what, so like 0.0 is 1 quarter, 2.5 is a quarter, 5's a quarter, 7.5, those of you in TRG understand it, but that's a shorthand I use for where to want to enter here. So just grabbed a whole bunch more because I think we're about to get a sweep down here. So now I've got 26 micros from 175. And we'll take profits as soon as it does any sort of pullback. We'll just let it sweep through buy orders there. Assuming it sweeps, this is pretty aggressive. Look at all the buy side, and the ask is getting lifted. Above. This tape is just, I'm just running blocks right now, 20 or more, I think. So let's take that down just a bit. So maybe see what the littler people are doing. Let's go down to 10. I wouldn't be shocked if bigger guys are breaking orders up a little bit here. There we go. Yeah. So let's see. Get another one up here. So, all right. We got that one. Still rocking and rolling to the upside. The beauty of this is, I've got a 28 lot on and I'm not taking dollar-wise a whole lot of heat, even though I'm pretty far off the trade here. It's right at 10 and I'm short from 2.25. I'm tempted to scale a little bit more, but I really want to see how far it can really go here. We're at SD4 right now. So 40.15 is SD4. The odds that it blows through that are so low. It certainly could happen, but let's see what we can do with this one. So 15 is very interesting because that's that one. And so is 20 again. So let's see what we can do with this. I'm going to get a few more here while we're up here. And we'll get some more orders down there. Okay. This is a fun one. Little high volume node right there. If it trades through that, it's going to trade down to here, which is right about where I am. So that should be interesting. If it holds here, we'll probably end up here. But I think we're due for a sweep down here at some point. We're trading into some liquidity. We're getting some high volume. We clearly have extended a bit here. Look, you can see that's right where 17 is where we would be at the 4th standard deviation of the current VWAP, which is coming up. But it's still all the way down here. Oh, we're about to get profitable here on these. So I've got 40 on from 4.25 with a whole bunch of orders below to take profits. And we'll just kind of start doing that as soon as it gets into profit there, which it's doing right now. Here it comes. And boom. All right. We're going to start taking profits in just a second. We need to blow through this this high volume node, or if it holds, then maybe we will take some off anyway. Let's see. That's a way to reduce risk and then reload up here. But I think we're going to trade down off of this. Let's see. Oh, this is so much fun to trade. I got to tell you, I really like this. It's just, it's not just obviously making money, but you get so much more fun with the math instead of just sitting waiting for one thing to happen, which is a really good trader discipline to wait on one good setup. But when you have these kinds of volatility, it's just a different style for that action. You can see all 4 of the instruments are way up here at extremes. If you want to see where we are in terms of change, we've got like a 3% in NQ, 1 3/4 in ES, RTY is about the same. And again, those aren't crazy high numbers. We could have a short squeeze into the close and go up more from here. That's not out of the question. I'm going to reset my footprint here so I can see new traded volume. Looks like it's getting absorbed and it also wants to puke to the upside. So I think we're going to see both of those things. Oh, good sweep down over there, but they're not. The sweeps down aren't getting enough traction yet. And you can see again, I'm just scrolling down here in NQ. The VWAP in NQ is all the way down. Where is it? Geez, right there, 23. So, and just to be clear, this isn't any sort of reversion to VWAP technique or anything. I'm just using that as a metric for where, the majority of the volume is right now. That's all. I don't believe in the idea of reversion to means or anything like that. I mean, ultimately, the two will coincide, but it's not a tradable edge. It could happen after the close. That's not uncommon when we get this aggressive. This may end up being just a short squeeze that doesn't look back until we go into the equities close and we go into settlement. That could happen. So always keep all the possibilities in your head. Yeah, this is a really good example here. It's also a good example of why I don't like to do it in ES as much, because ES just doesn't give you as much motion. And so, you have to scale and you have to do it carefully, and you don't get as much up and down, back and forth motion to work with. So it's harder to do. Oh, by the way, just to be clear, JVC, to your question, this particular trade I'm not copying. I turned it off for this trade because I really wanted to be aggressive. So I'm just doing this in a big account. Yeah. Yeah, because this we could really extend here, and this one I don't know if I want to keep the zoom going, but this could be a really good trade into the close, because if it can stay up here, we're gonna trigger an even bigger short squeeze. I don't think it's going to happen that way. I feel like we're going to pull back at least into the volume, but it's taking its time doing it. So let's see. Remember, I just got down there a minute ago to my profit. I took two of my trades there off very quickly, and I haven't added more up here yet because I kind of want to make sure that this is as far as it wants to go before I start scaling in more. So I've got a couple up here just to catch an extreme, but a push above 20, well, actually 25 right now is now the fourth standard deviation. So that would be like right up there. So that's kind of, it's pretty hard to get past that, even with a wicked short squeeze on without some sort of pullback. So let's see what happens here. And we can start taking some more right here, right when we get there, since I put a few more on up here. So one more. I wonder what was said. I'm curious if anybody heard what was said in the press conference that caused this. Must have been a good one. Yeah, that's true. That's true what you just posted, Lance. But a lot of people think it's a trading edge, that we're going to revert to the VWAP, or price and the VWAP will coincide, but one doesn't necessarily go to the other. It depends on where the volume is and what the price is doing. So treating it as a reversion to mean trade is not a good edge. It's a good metric, but you need other things to determine where to get a good entry and where not, in my opinion. Alrighty. So, again, imagine if this was, like a 4 or 5 lot in minis instead of 44 micros. I would just be taking so much risk if it blew up on me and went, even higher. It would, every couple of ticks would be thousands. So, this way I can scale in and out, and I'm not getting a lot of opportunity to do that. I just want to be really clear. This is not pulling back too much. So this is a very, very good example of how you have to be careful with this. And if you keep your head, almost any situation is manageable. This one could be an exception if we get a short squeeze between now and to the close that just never looks back. I would be really surprised by that, but the market surprises me all the time. So we'll see what happens. Did I give Powell? Yeah, really. I told him to wear the red tie. Okay, here we go. We're coming back into the range now. Let's see if we can get some momentum on the blocks. A little bit of buying right there. I want to see there. Sweep. That was a sweep down right there. See how it plowed right through the bid, went below the bid. That was a sweep down. So far, that's not getting bought, so that's good. We've got a little bit of down momentum. There's another sweep down. There's a little bit of buying. So, that's some people probably taking profit, I suspect, if they were already short. But these blocks of sweep down are good. We just need a little more of that energy, which we should see. It's so thin up here in the volume, we should see that, and then we'll start taking profits again. let me put up the footprint. Just if you're playing the structural home game, we had some exhaustion up there, you can see, but not a lot of absorption, just a little bit of exhaustion. So that's also potentially relevant, Okay, let's see if we can get some more sweeps. There was another sweep down from 10, but it's holding that price. So again, that's what I'm watching in the tapes. If it gets below 10, 7.5 and then 5 will be in play very quickly. And that's where I am. That's how the quarters work. It's just, if you've ever been around the pit at the CME back when there was a pit for the SP futures and the ES futures, the quarters are something the pit locals used to talk about all the time, and they traded around the quarters all the time in the pit. Since we went electronic, it does as well. Nobody seems to really understand why, other than it's just psychology of breaking a 10 number into 4 pieces. Humans do that. It's called chunking. But this is only true in ES. I haven't seen that in other instruments. There's other behavior in other instruments, but the quarters thing is an ES thing that I've observed over the last 30 years. God, I was actually standing on the side of the pit doing that 30 years ago, and that just blows my mind that was 30 years ago. It feels like it was, last Thursday. That's what it feels like when we're about to start taking profits here yet again. You know what? Just for fun here, I think I'm going to take 4 off because we're close. So again, you don't have to wait till you're profitable to scale out. I'm just lowering my risk, and I can reload up here if we push up again, because I got down right to break even. Again, just took a little bit off just to take the risk down a little bit, scale out just a bit, in case I'm not totally right. I'm going to make a lot of money if it plows down anyway. So, this is a risk management technique that these blocks let you do. Again, that's not something I would try to do with, 4 minis, but with 44 micros, it's real easy to do. And you can manage your way out of a bad position. You can manage your way into a position that's working. And it just gives you so much more flexibility. Hey, thanks, Verve. We will see you soon. Thanks for coming. Oh, yeah, I totally agree, Amy. We could rock and roll down big time. That's why I'm not taking all of this off. I'm just putting up a bunch of 1 lots here to start scaling out, but I will have some left if we get a good push down. Gosh, this is not what I expected today. So I'm really tempted to keep this session running into the close, just so we can see if we get either the short squeeze or if we get just a epic trade back into the range going into the close. As long as I can keep my energy up, guys, I will keep going. You're feel free to leave if you don't want to hang around, but this is just too much fun right now. So, excuse me, burping and drinking coffee at the same time, not a good idea. Okay, we just got filled on another one, so now I'm scaling back up here at the top. Remember, I took some off down here. That's why I did that, just in case it didn't go straight down. I could get what will in effect be a better entry on roughly the same amount of contracts. So now I'm going to have 44 again. There we go. Let's see if we can get 2 more up here. It's a much better entry now than I had because I took those 4 off and put them back on. That's a good example of what I'm talking about. I'm going to add a couple more here, I think, too. Let's see if we can get those 2. Okay, so 32 is now where SD4 is. So we are pulling the market up with us here. This is not just trading back into the range too quickly. So this will continue to be very fun here. Take a couple more. I'd like to get that up to about 10. Let's do that. Okay. Alrighty. And let's put some more orders in here. Okay. I could end up with 100 and be off sides here. That's not out of the question. But the amount of money I would lose doing that would be relatively small because, again, I've been scaling in and out, and I'm controlling the risk as I'm doing it. So, oh, thank you. I reminded you of your dog. We did have a big absorption right there, 600 by 50 or 500. I'm sorry, there's actually 2 of them there. Let's filter that a little less. Yeah, so that was the buying right there. Yeah, a little bit of buying down there. So again, if you want to see how the extreme This red would be the fourth standard deviation. We're right on the third one. And see, this is the VWAP, the blue. It's coming up. So the volume is accumulating up here. But I just want to call your attention to how much of the volume is not up here. So let me show you that. That's kind of another way to look at this. We had stops at the top. That's interesting on the last push up. So that's a good thing for a pullback. See, look at where all the volume is. The volume is all the way down here, which is, 84, 39.84. We're at 40.19. So this air pocket is what I'm playing, and it ought to be very interesting. Whether it fills or not, again, it's we could end up just sitting up here. We're certainly seeing buying up here for whatever reason. Oh, you know what? I want to look at I did want to look at the volume again. So here's where we are on the volume. Not a big day. We just did 1 million shares. That's not a lot for ES, but it's not pulling back. So yeah, I don't know about the ATR. That's something Lee normally does. Do you have that on any of your
I
charts?
have it. We're not quite there. It's at 32.
32. Okay, which is right about where SD4 is now. So
yep, it's just a little bit ahead of that.
That's interesting. So that's an average true range over how many days?
21.
21 days. Okay. So that's not all that dissimilar to this view. This is the ES, and I've got 3 days of VWAP and the extremes of VWAP. So right now, we're up here, which is only putting us at the extreme of a couple of days ago and not anywhere near, where it has been. So, we could continue up again. This is a fun example because it's not working right away, and good trades work right away. So I'm definitely off sides. But it's funny, I'm not fearful up here. Number one, I'm not concerned about the risk because I'm managing it. But also, it feels like at any time we could get a really good sweep down like we're getting now, as I started saying that, and it will just instantly become very profitable. And joining that once it starts would be very hard because if we do get a good drop, it's going to do it pretty quickly like it just did. That was what? 7 points there in 1 5-second bar here on my auction vista. So we're trying to price reject the pullback. We just plowed through that, so that's good. I'm watching the structure over here. Remember, we have stops at the top, and that tends to be a good indication of a short-term high when we blow through the stops. That's a puke of people that were off sides, basically. So people that were shorting got out of the way, and they covered at the top like so many people do. So now I want to start taking some off again because we're back. I'm starting to take. I'm at break even here. Actually, I'm profitable in about another tick. There we go. Now we're profitable. So let's start scaling out of this just in case it goes up again. Got plenty of contracts here to take profits on, but this is a good example of how to manage risk. And here we go. We are going to start taking more off profitably. One good sweep down here is going to go through all of these buy orders I've got. And, then I'm thousands profitable if we get there. So let's see what happens. Here we go. One good sweep will start selling us. I'm just going to let some of those go. Remember, I'm short 58 here. So let's buy a few at the market just in case. Take it down to 50. There we go. And you know what I'm going to do? I'm just going to stick a whole lot more orders down here. So if it gives us a good sweep down, it'll just plow through them. I don't even know how many I have. Let me go look here. Looks like I have 20 orders to buy. So that'll take out all but 30 of my contracts. So let's see what happens. Should start happening right now. We're right at the bottom of this high volume node, and there's a massive low volume area below us that we could literally just fly through. So certainly down to 0.0 is a very interesting spot, and we're trading at 11 right here. So, and I'm now short from 13.75. The way Jigsaw works is it averages the price as you scale in and out, first in, first out, and then P&L is for flat to flat. So that way, you can see where your representative P&L is as you're putting them on and taking them off. So I'm basically break even right here on this whole mess, scaling all the way up and and taking profit on the way down. So I haven't lost anything here at this point, and any movement down, it's going to start getting really, really profitable like that. So yeah. So now we're plus $500 on this trade. I'm going to just start doing some market orders here because it's getting absorbed there again. Don't want to get stuck there. Let's take another 10 of them off. Oh, did Jigsaw hang? Sometimes does that when Zoom is running. Crap. Hang on a second, guys. I think Zoom might have crashed me. I'm going to stop sharing the screen for a second. JVC.
Go for it. Yep. Do what you need.
Yeah, just so I can see what the problem is here, because my price isn't moving, but I'm getting filled. So I'll be right back.
Sure.
Okay. I'm having to reconnect here, so I think it should be okay in just a second. But in any event, I'm taking profits either way. I'm just not seeing it on my Jigsaw, which is
as long as they're happening,
Yeah, okay. It's reloading right now, so I think we'll be okay in just a second, and then I'll reshare the screen. I just want Zoom sometimes does this to me because I've got so much crap running at once. It sometimes does this to me. So didn't want to do that. Hang on a second. Cancel. Sorry, guys. This is frustrating, but nothing I can do about it. Okay, let's restart. Okay, I'm going to restart Jigsaw too. Give it a second. Well, this is no fun. Hang on one second here. I'm just going to the task manager and killing it. I think Zoom did that, but whatever. I'll be able to fix it in just a second. I just got to restart Jigsaw. And I left some of the position on. I took some of it off and I left some of it on. So it'll be interesting to see what happens when we reopen it, which will be in just a second. Okay. There we go.
I haven't gone anywhere crazy, so.
I think I can restart it now. Hang on, no, it hasn't moved that much. So let's do that. Okay, so Rhythmic is
actually coming down nicely right now.
Oh, good. Then I'm in good shape.
Yep.
All right, here we go. I'm going to just restart. I'll go ahead and start the screen again, share here as stuff comes back up. And we'll see what's going on. Come on, Jigsaw. Let's go, baby. Platform fun. Never liked platform difficulties, but I've built enough structure around my trading environment that this kind of stuff never, ruins my day. But sometimes it's just a pain in the ass, which is what's happening now. Yeah. So are you saying your heart would kill you being in that trade or sitting through a platform crash, Pete? Which are you talking about? Because I could see that for both of those things, but okay. Jigsaw should be loading here in a second. Come on. What's going on? Oh, crap. So some little piece of Jigsaw is still running. And so when it tries to load, it comes back.
Need to reboot maybe?
I had to do that once before. I really don't want to have to reboot in the live session. Let me see if I can just go and figure out what the process is and kill it.
Because you can toss host to me and do what you need to do and come back.
You know what? That's a good idea. Let me just do a full restart really fast.
Yep.
Well, yeah, I'll make you host and I'll be right back. And then we'll see how I did here on my trade.
Yep.
So let's see.
So far, you're okay.
Actually, I think I can leave because you're co-host, right?
Yeah, you should be able to just bail and it'll make me host.
Yeah, let's see. And then just make me co-host when I get back.
Yep.
Let's see.
No problem.
No, it only is giving me the option to end. So I'm going to make you
okay,
host.
Just make me host.
Yeah, and there you go. And yes. Okay.
Boom,
now,
got it.
All right. I'll be right back.
Yep. On today's episode of Platform Fun, nothing quite as infuriating as your internet going out or your computer completely just melting down and, that kind of thing, like while you're in the middle of stuff. That is just the worst. Yeah, exactly. On today's episode of Stupid Things About Zoom. Yeah, now we're pushing up. Hello. Oh, you know what? I could share my screen. Duh. Just realized you guys are staring at a black void. So let's fix that. I've just been playing along here. I'm in Sim. I'm not doing this in any serious account. And I'm not scaled up anywhere near as big as Jeff, which frankly is hurting my average price. If I had been working with more size, I could have brought my price up higher, but oops, that's the wrong one. This is the one. Yes, there we go. So we're almost to that ATR you were talking about, Lance. Almost there. It has moved slightly, of course, because the range has expanded. So, you know. Although price rejector right up at the top. How's correlation doing? Stops at the top of NQ. We got UB on RTY and nothing on YM. So yeah, it might have it in it to go a bit more. Yes, Powell needs to keep squeezing his shorts. Something like that. Come on, can we push back down again? Yeah, we're just sort of exhausting, kind of starting to exhaust up here, but there is still a little bit of volume. So, oh, wait a minute, this is not correct. Hold on, I need to fix that. Numbers bars, you don't look right. Are you right? Hang on. Aha, I thought so. That's more like it. That means you're wrong too. Ooh, let's fix you. There we go. Hello, come on. That's more like what I wanted to see. Saw this massive blob of volume in the pullback bar, and I was like, wait a minute, holy crap, what happened there? And it's like, oh, that's not really big volume. It's just the scaling. So, all right, we're going to break this price rejector. It looks like it wants to. UB and RTY is about to go. There it goes. Oh, no, not quite. NQ just went. NQ just popped its ledge. There goes. There. Boom. There we go. Nice little aggressive pop. I'm going to go ahead and just for fun, see if I can throw one more on there. Can I get one more on, please? Calling one more on. Ah. I like limits way too much. I really have an aversion to market orders. Yes, I know you do, Amy. Can always count on you for a moron. Oh, boy. The fun we have in TRG. Sense of humor, most definitely a prerequisite for belonging in this group, by the way.
All right, I'm back.
Hey, welcome. Feel free. Oh, here, I'll make you. Oh, you're already co-host. Okay, cool. Well, then
yeah, no, I can share. Although there's nothing to show. I flattened out and took profits because I had to restart. So
yeah.
And luckily, actually, we're back up again now. So there's another bite at the apple up here.
There is.
Am I sharing? Oh, you're sharing. Okay, fine.
I'm sharing, but cool. You can take it if you want.
No, there's nothing really new to explain. You know, that was a really good example, and now we're up there again. I didn't start Thinkorswim back up for where the Sigma 3 and 4 are, just because I don't want to have multiple stuff running here while I'm zooming. But
sure,
we've already gone real far over the session. So
oh yeah, for sure.
Let's do this. Questions, comments. You know, what questions can I answer now? Are there? Let's see. We missed them. Yeah, I'm sorry. You know, we've had this happen with Zoom a couple of times. I don't know if that was a Zoom thing there, but Jigsaw rarely hangs, and it hung. But when I went to restart, it was a process that wouldn't restart. So I have a feeling this was Zoom interfering with the data flow, and it does that sometimes. So anyway, didn't have any severe damage from it, so that's cool. So what other questions can we answer? I love this technique, particularly in NQ. But you know, when we have all this motion, it's just so intuitive to trade. But obviously, when the platform burps, that's no fun. So Does Jigsaw run in GFX card?
In the GPU? Does it run on a graphics card? I don't believe so. I think it's all CPU based.
I think so. Yeah, I think it's all. It's not a hog at all. Jigsaw is really thin code. It's really small. But when remember, I've got it linked through the bridge to Ninja, and Ninja is garbage code. So the problem could have been Ninja. I've had it hang up Jigsaw before, and I'll just close Ninja and trade on Jigsaw. And I tried that at first, but because I had the copier turned on, I wasn't copying that last trade. But because of that, Ninja protested when I tried to shut it down. So that's why I just restarted. It just took profits and restarted the whole damn thing. So. Yeah, it's still a squeeze, although, again, we're not getting very far. We're still right up at this extreme. What's that, 23.75 now? So.
Yep. And we're so close to, was that SD 2, 3, 4? Yeah.
It's got to be 4. I'm not ready. You know what? Let me bring my.
No, it's.
Is it 3?
3?
Hang on.
It's 3.
Hang on. I'm going to get my thinkorswim back up. I think my platform is stable here. So, and then. In fact, if you want, I'll take the share back so I can show it.
Yeah, feel free.
I'm a co-host. Okay, so let's see. Where's the share thing? Oh, everybody's
popping their ledges again, but with not much energy. Just a little pop, and then it comes back in.
Yeah, it's just not pulling back that much, which is why in ES this is harder to trade than it is in NQ, because even with all this energy up, NQ is having decent little pullbacks. Tradable ones, I should say. Whereas ES, they're tradable, but before my platform crashed, you saw it had gone into profit, and that was right about where all the buyers stepped up, where I was also buying, and that isn't unusual when you try to do this in ES. It's just a thicker, slower moving, more liquid instrument. Okay, I'm up and running again now here. So where is the stay co-host, reclaim host, stop sharing? Okay, and then where's the share button? God, this platform drives me nuts. Platform meaning Zoom. There it is. Okay, share screen. All right, now I should be back up. Can you guys see my screen?
It's coming, and there it is. Got it.
Okay, cool. So here's the current extremes. Yeah, no, again, because the volume is coming up, we're doing a lot of volume up here. So, that big volume node at the bottom is starting to get balanced. So the VWAP has come up, and now SD4 is up at 52 and 3 is at 34. So we're just between 2 and 3 here, which is pretty much where we've been since the announcement. So this market is not looking like it wants to pull back. I mean, the gap is way down here. We're nowhere near there. So I wouldn't be shocked if this goes into the close, and then I bet we get a really good setup right when we go into settlement. So after the equities close, the next 15, 20 minutes, I've seen that pattern on other days. Let me show you real quick another view of this just for fun, and then we'll wrap this session up. This is the same thing, only it's in 5 minutes, and I'm showing multiple sessions. And the reason I've got this is just take a look. Like, this was yesterday, okay? And again, we were riding a downtrend, but then equities closed right here, and then we had the pullback into the range. And the exact same thing happened in ES yesterday. And it pretty much happens every day. See right there? We had been riding the low end of the extremes, and then we pulled right back to the VWAP after equities closed. And we did that in the settlement. So, I wouldn't be shocked if we continue to, run up and squeeze shorts until equities close, and then it could be a very interesting trade back to, or in confluence to whatever value happens to be at that point. So that'll be worth watching.
Interestingly, anyway, I just noticed on my TPO for ES at 40-30 quarter, we have an old poor high.
Oh, that's very interesting.
A while back. Let me see when that's from, actually. Let me go back.
Where is it at?
What was it? 40-30, 43? Hang on. 40-30 and a half.
Poor high or poor low?
Actually, you know what? I can't tell. Good point. I'm not sure which one it is. Hang on.
Was that on like the 12th of June or the 9th of June?
I'm trying to find it right now.
Okay, can you see my screen?
Silly. Yes, I can.
Is it this one right here?
It probably, if you've got one at that level, then that must be it.
We're right on that one. And then there's another one up here, which is real interesting at 41.40 or so. that's kind of, if we keep going up, that's kind of where I think we're going to get, is right up to this volume up here. So this could shut up. We could have a wicked short squeeze into the close. Now to the question in the pit. Isn't wait a minute, earlier question in the pit. Hang on. Okay, isn't it risky to leave a position in right before the close? Remember, equities close at the top of the hour, 1 o'clock my time, using our current time zone, Lance. The futures keep trading for another hour. And so that's what I'm talking about. So once the equities have established value, then the future, the hype in the futures and the short squeeze in the futures can run out of energy because equities aren't going to go any higher. That's it. We've closed. So, and I often will hold trades into the settlement period. Sometimes I hold them overnight if I really like a position, but generally I do that with ETFs. So hopefully that.
By the way, Jeff, it is a poor high, and it's from June 9th.
Oh, okay. That's
way back, and an overnight too. June 9th overnight. Okay,
let's see. Oh, okay. June 9th. Right. Yeah, that is the one.
Okay. Yep. Then that's it.
Yeah. Remember, I break my sessions. Do you have your sessions broken down into regular? Yeah. Okay.
Yeah, I have them split session. Yeah.
Okay. Well, we have that. We can see that spot right there. I don't know why mine isn't showing up the way yours is, but whatever, platform weirdness.
Yep.
Okay, so let me go back to some of the questions here. Yeah, there's no SD that swarming works best at, Jeff. You're misunderstanding what it means. Statistically, a standard deviation, all right, if we're looking, this is a really good topic to spend a minute on, so I'm going to do it because there's way too much confusion and people that just aren't math people trying to understand what we're talking about. So let's put this into human terms without all the math, okay, or with the simplest amount of math. Okay, if you have a bell-shaped curve, which is, the standard distribution of statistics, like that's why, the people in the middle get C's in class and the people at the top get A's and the people at the bottom get F's. That's a bell-shaped curve. Okay, so, you have a middle. And then as you get away from it, that's where you find standard deviations. In a standard bell-shaped curve, the first one occurs right about here. The second one occurs right about here. And that represents about 95% of the volume at 2 standard deviations. The third one gets you almost to 99%. I mean, it depends on exactly how you're calculating. But the point is, anyway, any place above 3, you're talking about fractions of a percent, but that's not what you're trading off of. You're trading off of, okay, up here, the odds are really good. That doesn't mean it's always going to work. So there's no, you always do it at 2, or you always do it at 3, or you always do it at 4. It's just a relative measure of extremeness. And, you want to see how it trades. And right now, this right here is 2, this is 3, and this is 4. It's unusual that we stay above 2 this long, but when we do, we tend to do what we're doing and stay between 2 and 3. But again, that's not what you're trading off of, Jeff. What you're trading off of is the energy of the extremes, how much it's pushing up by, how much it's pulling back by. And right now, we're not getting a lot of pullback, which is why I would not be aggressively selling into this at the moment. It could end up being a squeeze into the close based on this. What I would have expected and what's much more likely is when the numbers came out and FOMC happened, we squirted up and then we traded back into the range down here somewhere. That's what usually happens. Today, it's not happening, although, the day's not over yet. So if you look at it on the footprint, it's pretty clear what's going on. And, if we don't predict the future and just let it play out, it will. So we are way above the initial balance and we're way above any measurement. And we've had some, pullbacks get bought and we're building some volume up here. So, you can't just look at it and say, well, it's 3, short it, or it's 4, short it. You can't do that. But what you can do is what I was just saying a minute ago, going into the close, if we're this far extended, settlement will tend to be, these 2 numbers will get closer together as we settle. In other words, in the 45 minutes or so after the equities close. So using my time zone, 1 o'clock to 1:45, 2 o'clock is when everything actually closes. And then we reopen at 3 o'clock my time. So hopefully that all makes sense. Yeah, the least that will happen, to Amy's point, is that, the guys that have been long here since the FOMC have ridiculous amounts of profits. And if they don't take those profits between 1 o'clock and 2 o'clock, they have to wait till 3 o'clock, and that's a whole new session, and anything could happen. So that's the thinking around why we see that. But it doesn't always happen. Maybe this is bona fide, equity funds are buying, and they're buying futures and they're driving the market up. That's possible. I don't think that's what's happening. The internals don't lead me to think that. Let me show you the internals right now, which is just kind of a way of measuring the overall market. Yeah, it's strong, but it's not that strong. We came up, we've got some decent volume, but again, it would have to keep doing this into the close for this to rank as a really strong day. And it may do that. By all means, it could do that. Okay. Cool. All right. Thanks, Jeff, for the follow-up answer. I appreciate it. Helps me know that I'm making sense or not. Oh, short squeezes can be the fastest moves there are short squeezes, because if you're off sides and you're trading a big block of contracts, you just start hitting the market to get out, and that's really visual behavior on a fast chart. So let me bring up. That's why I use these 15-second charts. Because I can see these equivolumes. So the width of the bar is the volume. And so, you can see there was lots of energy on this breakaway from the initial balance, which was right there. And each time it attempted to pull back, it's still getting bought. But this entire area in here is, very likely to drift down, if not between now and the close, once the equities have closed. It doesn't mean it will, but that would be normal behavior in the futures market. So, but between now and then, and particularly at the close, we could get a wicked short squeeze. We're already up a lot, so anybody short is fairly offsides. I mean, look at this. We're up 3%, 3.5% in NQ, 2% in ES. Remember also, God, this is a perfect moment to remind all of you, critical. The pattern overwhelmingly, whatever happens today will reverse tomorrow. The FOMC moves are often really crazy one direction. And go back and look at last month. It was epic. We had been up like 5%, and we went down then that much and then some last month on the FOMC trades. So, but hey, we're right up at the highs again on all the indexes, so we're still going up. Never fight price. You can trade around price, but you should never just have a bias against price, because price is pretty much in control of the market. Volume helps us get to prices, but the price is the price, and there's a lot of people that are probably offsides a bit here. All the perma shorts, perma bears. All right. Yes, I agree with you, Amy. Mine definitely are. Crackhead monkeys are back. Exactly, Dimitri. That is so true. Buy the dip. Do I have any stats on the length of the press conference? No. I don't even watch them, Brian. I just trade the price action based on what's in the. I used to, put on CNBC, and it's just a distraction. I end up, thinking whatever the person who's talking is saying. That's how people work, and I don't want to be influenced that way. So I literally don't watch the news. I don't watch TV. If I watch TV, I'm watching Formula One races while I'm trading. That's my MO. So no, I never pay attention to what they're saying, because it's just a distraction. Really good question, by the way. Yeah, you never know. Remember, a short squeeze is a very, very specific kind of event. And again, remember I showed you at the top of the last 30-minute rotation, I said that we had run stops. Well, guess what? We cleaned that up and we're going up again. This is no longer stops. This is, a price rejector pullback at the high. This may not be done going up, but it's not even stops anymore. We flew right through where those stops were, and we're going up again. So, there's definitely a bit under the market on very, very, very low volume, which is critical to keep in mind for tomorrow. It's only 1.3 million shares, contracts rather. That's nothing, For this kind of energy to be legitimate, I want to see, 3 million contracts. Then I would say, okay, this is really strong buying, not just, a short squeeze. Yep, that will get some pennies in a wad. The inverted yield curve. There's so many weird things going on. It's such a great time to be a trader. as long as you train yourself not to have preconceived notions about anything, and keep your head. That little crash I had could have been really that could have cost me a lot of money, and it didn't. I actually got out profitably, but platforms crash, stuff happens. You just make sure, how many times while I was doing that, did I mention the word risk management? That was my focus. And while I was in the trade was managing the risk of the trade, which includes my platform. And that's why even when I wasn't taking profits, when it pulled back, I took some back off of my short because, it enabled me to get a better entry, move up my trade. And then when it did pull back less, I was able to take profits and get out of the trade profitably. That's what I mean, how the idea of using, big blocks of micros, I was in 50 micros, there's no way in the world I could have managed that with a 5 lot in ES. The risk would have been just way too big. If it pushed up on one of these big burps up, that could have doubled my loss in a second. And you just don't have a lot of flexibility with that. Even with a big account, there's the only argument against under these conditions, scaling micros instead of minis is you're paying slightly more commissions, which again, as I said, shouldn't even be on a consideration for you, except after everything else. Obviously, you want your costs as low as possible, but given the parameters today, when we're making a couple $1,000s trading, and we paid $50 more commission trading micros instead of minis, who cares? That's just irrelevant. S&P
By the way, we just cleaned up that old poor high.
Yes. Oh, we did. You're right. And look where we are. We're
right at ATR. We're 2 ticks off of it right now.
And we are riding up the standard deviation 2 and 3 gap, which is a huge extreme. Just for the math again, we are in the 99th percentile up here away from the VWAP, but we're still going up, So, you don't, that's why you just don't pick a number and sell it, or pick a number and buy it. You've got to put it in context with the action. And here's some more stops getting run. When you see it trade up at the ask and then it goes above it for a second and then pulls back, that stops getting run. And now we're seeing a little bit of absorption, not a lot. No exhaustion at all, though. So, now a little bit of exhaustion right there. It's still a price rejector long on the pullback. Crazy times. Okay, I have to wrap this up. My delivery kind of had a little tiny glitch in it, which they promised me they would resolve, and now they're coming back with it. So I need to go deal with that. So I apologize. Well, actually, I don't apologize. I said I might take this to the end and trade the close, but I'm not going to be able to do that. I have to deal with that matter. But I got to tell you, this should be a really interesting close. Definitely a short squeeze up before the top of the hour. Remember that equities close at 1 o'clock my time, 4 o'clock Eastern. So that's in about a half an hour. And then after that, that could be a really interesting short. And certainly tomorrow is a very interesting day to look for a reversal of this big move. That's an overwhelmingly common pattern. I went back and calculated that one. The last time somebody asked me, what are the odds on that? I think I went back 10 years. And I looked at the FOMC, every time we have one. And I think the next day pattern is true, like just under 70% of the time. I think it's 66% of the time. The day after the FOMC is a total reversal. That's what that statistic represented. So, we're up 3%, that means tomorrow we're going to be down 3% or down 2%, something roughly equivalent. And the odds of that, are, call it 7-3. 66 to 34, something like that. Okay. Thank you, Joe. I really appreciate it. Thank you, everybody, for coming. Guests, once again, thank you. Dimitri, always great to see you. Please join us anytime. You are always welcome. And as are the rest of you. Keep in touch, those of you that are friends of TRG. I see you every now and then on Twitter. It's fun interacting, Dimitri. Don't be a stranger. You're welcome to stop by and visit us anytime. All right, guys, let's go ahead and wrap it up then. JVC, anything you want to add?
Nope, nothing else. This was fun. I hope you all enjoyed something. And if you're thinking about checking out TRG, please do. We would love to have you drop by. So at least check out our free course. So
yes, please do. Check out the free courses. And by all means, even if you're not trading it, just, watch your computer when the equities close and see what happens with the futures. It could be a very interesting time. If nothing else, a good one to watch. All right. Thank you, Brian. Appreciate it. We'll see you guys all later. We're out of here.
Have a good one.